Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. It is February 11th, 2026, and I have to be honest with you. I woke up this morning, checked the charts, checked a few feeds, and I felt like I was being gaslit by the entire internet.
That is a very specific feeling.
Yeah.
But looking at the data I have in front of me, I can't really say you're wrong.
It's weird, right? I mean, we are looking at a market that feels like it's living a double life. We have a genuine paradox on our hands.
We do.
On the surface, everything looks shiny. Bitcoin ETFs are just printing money. Inflows are green for 3 days straight. But then you scratch that surface, and the sentiment isn't just cautious. It's terrified. The fear and greed index is stuck on extreme fear.
It is the definition of a disconnect. Usually price and psychology, they move in tandem. Price goes up, people get greedy. Price goes down, they get scared. Right now, price is up, and people are hiding under the bed.
So that's our mission today. We're going to unpack why everyone is so scared, despite all the green on the chart. We're going to look at the visible signals versus the invisible threats. And speaking of invisible, we have a bit of a ghost story. A wallet belonging to Satoshi Nakamoto untouched since 2009. It just woke up. Or rather, someone woke it up.
It's a fascinating mystery. Probably the most interesting on-chain event of the year so far, I'd say.
And we're also going to cover why you should probably stop trusting your own eyes on Zoom calls and how the Middle East is basically handing over the keys of government to AI. But let's start with the money.
The money is always the best place to start.
Okay, so set the scene for us. It's February 11th. What are the hard numbers looking like?
The scoreboard is, well, it's impressive. The total crypto market cap is sitting at $2 trillion. So that's up about 2.6% on the day. And Bitcoin, well, Bitcoin is teasing us.
Yeah.
It is hovering at $69,608.
Oh, it is knocking on the door of 70,000.
Yeah.
That used to be the signal to pop the champagne.
It used to be. But this time, Nobody seems to be celebrating. And the reason, I think, lies in the plumbing of the market. I'm talking about stablecoins.
We've touched on this before, but maybe for a new listener, why do we care so much about stablecoins? I mean, Bitcoin's the star of the show. Stablecoins are just the boring dollars on the blockchain, aren't they?
Think of stablecoins like the ammunition in an army's stockpile, or dry powder, to use the finance term. Stablecoins like Tether or USDC, they represent money that is sitting on the sidelines inside the crypto ecosystem, ready to be deployed.
Right. So if I sell my Bitcoin, I usually move it into USDT. And if I want to buy more Bitcoin, I use that USDT.
Precisely. So in a healthy, raging bull market, you want to see that stockpile just overflowing. You want to see massive amounts of stablecoins being minted, because that means fresh cash is entering the system, getting ready to buy.
And what are we seeing right now?
We are seeing, well, nothing. It's concerningly flat. To confirm that this rally to 70K is sustainable, that it's a real bull run and not, a trap, I'd want to see stablecoin volume 30–40% higher than it is today.
That's a huge gap.
It is. I mean, let's look at the leaders. Tether is the king, but its volume is below 90 billion, 89.84 billion to be exact.
No.
Circle's USDC is at 15.17 billion, and FDUSD is barely a blip at 680 million.
Yeah.
These are not mania numbers, these are wait-and-see numbers.
So if the stablecoin volume is low, meaning the average trader isn't rushing in with cash, who's pushing the price up? Because $69,000 doesn't just happen by magic.
That's the two realities you mentioned at the start. The price is being supported by the ETFs. That's institutional money. BlackRock, Fidelity, the pension funds, they are buying steadily, algorithmically.
But the retail market, you, me, the people on Twitter,
we aren't participating.
we're traumatized.
That's a valid psychological assessment. I think retail investors have been burned by volatility so many times that they are hesitant to trust this rally. They see the price go up and think it's a trap. Meanwhile, the institutions are just quietly accumulating.
So it's like the institutions are the adults at the dinner table, just quietly eating their vegetables and getting healthy, while the kids retail are running around screaming because they think the broccoli is poisoned.
That's a colorful way to put it, but yes. The divergence between flow, the money coming in via ETFs, and fear retail sentiment is historically wide. And usually, when a rubber band stretches this far, it snaps back. The question is, does retail finally give in and buy, or do the institutions stop buying and the whole thing crashes?
Well, speaking of things crashing or burning, let's talk about this Satoshi mystery. Because while retail traders are scared to lose $10, someone just voluntarily threw away a small fortune.
This happened just a few days ago, February 7th. And honestly, it caught everyone completely off guard.
Walk us through what actually happened.
An anonymous user transferred 2.56 Bitcoin directly to the Genesis wallet.
And for context, the Genesis wallet is the very first wallet ever created on the Bitcoin blockchain. It belongs to Satoshi Nakamoto.
Correct. It's the wallet that received the mining reward for the very first block back in 2009.
And 2.56 Bitcoin. At today's prices, we're talking roughly $180,000.
Give or take, yes.
Okay, I have to play devil's advocate here. How do we know this wasn't just a massive mistake? Like, someone tries to copy-paste a wallet address, their cat walks across the keyboard, and boom, money's sent to Satoshi.
It's a fair question, but technically it's almost impossible. Bitcoin addresses are very specific strings of characters. The Genesis address is distinct. You don't just accidentally type it in. And most modern wallet software would scream at you if you tried to send money there. This was intentional.
So someone just woke up and decided to effectively burn $180,000. Because Satoshi isn't checking his email, right? He's not coming back for it.
That is the consensus. Satoshi hasn't moved a single coin in over a decade. The keys are presumed lost, or he or she or they are deceased. So sending money to that wallet is like throwing gold bars into the bottom of the ocean. It's a burn. You are removing that supply from circulation forever.
Why? What's the point? Is it just a flex?
The source material suggests it's a tribute, a kind of symbolic offering to the creator.
That is one expensive thank you card?
It is. But think about the culture of crypto. It can be almost religious in some circles. But what's really interesting is the contrast. We had this event, a burn of 180,000. But earlier in 2026, we saw another entity, a miner from the early days, move 2,000 Bitcoin.
Whoa, 2,000? That's what, nearly 140 million?
Closer to 180 million, depending on the day.
Yeah.
Now, that move was likely a cash out. That was someone saying, I've held for 15 years, I'm buying an island.
So we have the old guard cashing out and some new mystery player burning money for the culture.
And it highlights the difference between Bitcoin and the traditional system, right?
Yeah.
This transfer to Satoshi is publicly verifiable. We can all see it on the blockchain. If you tried to burn 180K in a bank account, or if this was a CBDC, a central bank digital currency, the bank would just wipe the ledger or reverse it.
Right. If I accidentally wired 180 grand to a dead account at Chase Bank, I'd be on the phone screening for a manager. In Bitcoin, there is no manager.
There is no manager. The finality is the point. It's a feature, not a bug. But it also means that when you make a mistake or attribute, it is eternal.
That finality is great when it's protecting your money from, inflation. It's not so great when someone steals your money. And that brings us to the dark side of this visible versus invisible theme. We have a security alert that is genuinely terrifying because it targets the one thing we all think we can trust, our own eyes.
This is a warning from Google, and it's regarding a group they call UNC 7069.
Which sounds like a generic error code, but they are actually North Korean hackers.
And highly sophisticated ones. They are targeting the crypto and DeFi sectors, but they aren't just blasting out spam emails anymore. They are using AI-enabled social engineering.
This is the fake Zoom scam. I read the notes on this, and I have to admit, I consider myself pretty tech-savvy, but this one might have gotten me.
It's designed to get smart people. Here's the playbook. They target you on LinkedIn or Telegram. They pose as a recruiter for a legitimate, high-paying crypto job. They do the whole dance chat, schedule an interview. Then they send you a link for a video call.
But not a standard Zoom link?
No. They claim they use a premium version of Zoom or a specific secure corporate client, and they ask you to download it.
Red flag number one.
Maybe. But here's the twist. When you join the call, you see the CEO of the company or the hiring manager. It's their face. It's their voice.
But it's not them.
It's a deep fake. Or a very sophisticated loop of previous video footage manipulated by AI.
That is insane.
Yeah.
So I'm sitting there fixing my tie, trying to impress the CEO, and meanwhile, the software I just downloaded is stripping my computer naked.
Exactly. The malware installs in the background. It steals browser data, cookies, passwords, and most importantly for their targets, private keys to crypto wallets. And they might not even drain your wallet immediately. They might wait.
It completely breaks the concept of seeing is believing. We are really entering an era where you just cannot trust a video call.
The advice from experts is extreme vigilance. If a recruiter asks you to download anything you refuse, use a secondary channel to verify the interview. Call the company's main line. It feels paranoid, but paranoia is a survival skill now.
It's ironic, isn't it? We just talked about how dangerous the digital world is becoming hackers using AI to trick us. But at the exact same time, the biggest companies are betting that the same infrastructure is safe enough to run the entire global economy.
It is the duality of the industry. While the hackers are breaking things, the builders are laying new tracks. We have a pretty significant update from Tether on that front.
Tether, the company behind USDT, they're investing in Layer Zero Labs. Now, interoperability is a buzzword that usually makes listeners' eyes glaze over. Can you give us a better analogy for what Layer Zero actually does?
Sure. Think of different blockchains, Ethereum, Solana, Bitcoin-like, different operating systems. Apple versus Android versus Windows. Right now, moving money between them, it's like trying to airdrop a file from an iPhone to a Samsung. It's clunky, it requires third-party apps, and sometimes the file gets lost.
It's a headache.
Layer Zero is trying to build a universal translator. It's the infrastructure that lets money move seamlessly without the user needing to worry about which phone they are using. But the reason Tether is investing isn't just for us humans.
The source notes mentioned AI-driven wallets.
This is the really sci-fi part. Tether isn't just building this for you to buy coffee. They are preparing for a machine economy.
Explain that.
Imagine an AI agent, like a personal assistant software. In the future, that agent might need to buy data, rent computing power, or pay another AI agent for a service. These agents won't have bank accounts at Wells Fargo. They will have crypto wallets.
So my AI travel agent pays the airline's AI directly.
Exactly. And they need a stable currency, which is USDT, and a way to move it instantly across any blockchain, which is Layer Zero. Tether is betting that the biggest volume in the future won't come from humans trading, but from machines paying other machines.
That is massive. It's an entire invisible economy running underneath the human one.
And that economy needs rules. which brings us over to the UK.
Right. While the machines are taking over, the regulators are catching up. Blockchain.com just got a big stamp of approval.
They received registration from the FCA, the Financial Conduct Authority in the UK. This is a very big deal because the UK is notoriously difficult to please.
Yeah, they aren't exactly the Wild West.
Far from it. The UK approach is strict licensing. They want to know exactly who is holding the money and how. This registration allows blockchain.com to offer custody and brokerage services. It's a signal that the adults in the room, the governments, are getting comfortable with crypto being part of the financial furniture.
It contrasts a bit with Japan, right? The notes mention a difference in strategy there.
Yes. Japan has taken more of an education-first approach, focusing on consumer understanding. The UK is regulation first, but the end result is the same: validation. The major economies aren't banning crypto, they are integrating it.
Integrating is one thing, but what's happening in the Middle East is on a whole other level. I feel like every time we look at the UAE, they're living like 5 years in the future.
They are definitely aggressive adopters, no question.
We have 2 stories here. One is about real estate, which is cool, an AI agent that finds you a house in Dubai so you don't have to scroll through listings. But the second story, I genuinely laughed when I saw the acronym.
You're talking about the new government department in Abu Dhabi.
The Department of Government Enablement.
DOGE.
DOGE.
You cannot tell me that is an accident. That has to be a nod to the meme, right?
In this industry, it's hard to believe in coincidences. But the meme aside, what they are actually doing is incredibly serious. DOGE is partnering with Inception, which is a subsidiary of G42, the massive AI giant in the region.
And the goal is AI native government.
By 2027, which is effectively tomorrow.
What does an AI native government actually look like? Are we going to be electing ChatGPT?
Not quite. It's about the back office, the plumbing of bureaucracy. They are launching a product suite called In Government. So think about procurement, the government buying supplies. Usually that's humans sending emails, haggling, filling out forms.
It's slow and prone to corruption.
Right. So Abu Dhabi is deploying negotiation co-pilots, AI agents that handle the negotiation with suppliers automatically to get the best price for the taxpayer.
So the AI haggles for the state, and it does talent matching for human resources. So instead of a human scanning resumes for keywords, the AI analyzes the actual skills and places people where they are most likely to succeed.
It sounds incredibly efficient, but also a little dystopian. I mean, if you take the humans out of the government back office, who is accountable when the machine makes a mistake?
That is the billion-dollar question. But the UAV's argument is that humans are already making mistakes, and they are slow. If you can automate the bureaucracy, you free up the humans to do the actual leadership. It's a very bold experiment.
It connects right back to our earlier point about Tether and the machine economy. We're moving toward a world where the boring stuff, payments, negotiations, scheduling, is all handled by code.
The invisible layer taking over all the heavy lifting.
Which brings us to our listener question of the week. This one comes from Ray, and Ray is asking the question that I think is on everyone's mind given the fear in the market.
The accumulation versus distribution debate.
Yeah. Ray asks, if ETF inflows continue, so the big guys are buying, but stablecoin volume stays low, so the little guys aren't, is this accumulation or distribution? Basically, are we going up or down?
It's the classic signal noise problem. Ray isn't alone in being confused by this.
So cut through the noise for us. What's the verdict?
It's a mixed signal, Ray, but here is how you can decode it. The ETF inflows are sticky. When BlackRock buys Bitcoin for a pension fund, they are not day trading it. They are holding it for 5-10 years. That is accumulation.
Okay, so the floor is rising.
Yes, but the low stablecoin volume and the extreme fear tell us that retail is cautious. This looks like distribution from impatient hands to patient hands. The minnows are selling because they are scared, and the whales are just scooping it up.
So how does Ray know when the tide might turn?
Don't just look at the price. I'd recommend Ray looks at a tool like Glassnode, specifically a metric called hodler age.
Hodler age. Is that like checking the ID of the Bitcoin?
Exactly. You can see which coins are moving. If you see coins moving that haven't moved in 3 or 4 years, that's old money selling. That's bad. That's resistance.
But if the coins moving are young...
If the coins moving were just bought last week or last month, that's just noise. That's traders churning. If the old hands are sitting tight despite the fear, that is the most bullish signal you can get. It means the conviction is really there.
So, Ray, check the age of the coins. If the old guys are holding, you probably should too.
And never forget the invisible hands, the macro factors.
You mean all the stuff outside of crypto?
Correct. The CPI data from the Bureau of Labor Statistics, geopolitics. If China starts selling U.S. treasuries or if the situation in Ukraine shifts, those macro events will override any chart pattern in crypto. We don't live in a bubble.
We live in a very messy, interconnected world.
Indeed.
So let's wrap this up. We have a market paradox where the price is high, but fear is higher. We have institutions buying while retail watches from the sidelines. We have people burning fortunes as a tribute to Satoshi, and hackers using deepfakes to steal fortunes from the unwary.
And we have the rise of the machine economy AI agents holding wallets and negotiating government contracts.
It's a lot to process, but I want to leave you with one final thought. We spent a lot of time talking about sentiment, fear, and greed. But if Tether is right, and if Abu Dhabi is right, and the future of transactions is handled by AI agents.
I see where you're going with this.
Machines don't feel fear, they don't feel greed, they don't get FOMO. So if the market becomes dominated by autonomous agents, does market sentiment eventually just cease to exist?
That is a profound thought. A market driven by pure logic and code, completely stripped of human emotion. It might be less volatile, but it might also be a lot harder for us to predict.
Or just a lot more boring. But until the robots take over completely, keep your eyes open, verify those Zoom links, and don't burn your keys.
Stay safe out there.
Thanks for listening to The Deep Dive. We'll see you next time.